Welcome to Business Innovators Radio, featuring industry influencers and trendsetters sharing proven strategies to help you build a better life right now.
Well, hello and welcome to this episode of our program. This is Mike Saunders with Marketing Huddle. Today we have with us John Pollock, who is with Financial Gravity. John, welcome to the program.
Thanks for having me.
Hey, so I love short, succinct company names and business names. So Financial Gravity, obviously financial, and then gravity is a nice action word. So tell us a little bit about your background and your company, Financial Gravity. What led you to get into this industry?
Well, I started out as in wealth management, and then I went to solve a problem that I was having. I started paying a lot of money in taxes because I was doing well, and I wanted to solve that problem. And the CPA industry did not solve it for me. I basically learned that they're historians. They record what I've done. They're not real good at helping me do it differently so that I can lower my taxes. So Financial Gravity was born out of that, and the idea is that gravity is an unseen force in the universe. If I jump off a building and choose not to believe in gravity, I'm still going to experience it. So that was the idea behind Financial Gravity, that are these unassailable financial laws that exist, and gravity can actually be used for you to help you. For instance, air flight doesn't suspend gravity. It actually uses the force of gravity and then adds speed and lift and thrust to fly. And it eliminates those three things to land. So you're actually using gravity to fly, not suspending it. So we figured that there are laws within the financial system that we could use to personally fly and increase our wealth and that type of stuff. So that's where the idea came from of Financial Gravity, and the business kind of grew out of my need to lower taxes. So we now help small business owners lower their personal income taxes.
Yeah, and I love that what you said, the two words, solve a problem. And so many times, you see business exposés or stories or, even on Shark Tank, things like that, where it's like, I just had this thing and I couldn't find it anywhere. And you had an actual problem. And, people are motivated more from something negative or a problem than motivated by something that is a little bit more positive. So it's going to capture someone's attention. So you had that problem and you're like, ouch, that hurts. How can I fix this thing? And lo and behold, you figured out a way to fix it, and you're like, if you could, or if you had that problem, maybe other people do. So at the very beginning, what was some of the responses to people that you were talking to? Were they kind of like clamoring and saying, yep, I've got that same thing, and hallelujah, there's a solution? And then, of course, now there's competition and all that, but you've set yourself apart from that over the years.
Well, there really isn't a lot of competition still.
Wow.
The biggest competition we have is apathy and a belief in a kind of a mythical system. This mythical system is the CPA industry saves money on taxes, and they don't. In fact, the A in CPA is accounting, and if you look up accounting in Webster's, it's to account for something. Basically, it's to record data. And so where I got a lot of traction with other small business owners was, is it just me, or is your CPA not really good at tax planning? And I kept getting over and over again, yeah, it's like I have to come to them with the idea, and then they'll, give me a thumbs up or a thumbs down. And that just didn't seem right. I thought the accountant was supposed to give me the advice. And in defense of accountants, they're not trained for that. The CPA exam is 14 hours, and there's not a single question on tax planning. They are not trained to do tax planning. So the business problem I'm solving is the fact that everybody thinks an entire industry does a thing that the industry does not do, which is kind of a weird business problem to be dealing with.
Yeah, I want to ask the question, at what point should a business be scratching their head thinking, maybe I need some of that? But before I ask that question, I want to just touch on what you just said and just make sure that people understand that there is a difference between a CPA and an enrolled agent, an accountant. Can you give us like a 30,000-foot view of what some of those distinctions are?
Yeah, so CPA, the P in CPA is public. So originally, a CPA was to be taught general accounting principles for publicly traded companies. And then that kind of bled into the individual small business owner that's also a CPA. CPA is it's expanded, but they are accountants. An EA is actually registered with the U.S. Treasury to do tax returns. So an EA actually is trained to handle tax returns, but neither of them are proactive tax planners. So there's this belief that if someone touches a tax return, then they must know how to move money around or numbers around on it, and it's not true. So that's one of our biggest hurdles, is letting people know that they're not getting the advice that they need, and as a result, they're losing tens of thousands of dollars. It's people's biggest single expense is taxes, and yet no one's really targeting how we lower them legally. You can just not pay it, but that would be tax evasion, and that's illegal. Yep. We don't want that.
Yeah, we want to work within the confines of everything. But isn't it true also that if you had someone that came to you and said, I just wonder if my guy's doing the right thing or my tax preparer is doing the right thing, can't you go backwards and look 3 years, and then if you found some opportunities, isn't 3 years the time frame window that you could go back in and do some amendments for mistakes? But then you could say, now let's, starting today, let's look forward and not let this happen again and capture some of these things. Because I'm sure that there's some things you would look backwards in 3 years and go, they just missed this. We can't go, it's kind of like backdating. We can't go backdate something. So we're only looking backwards for mistakes that we can capture, get some correction on. But from here on out, we need to be doing X, Y, and Z to make sure we capture these things that should have been done backwards.
So the way we explain it to people is there's really not a lot of stuff you can do backwards, but we can use the stuff from the backwards to project forwards. Because if we know how you're living your life, we can see if that information is inside of your tax return. For example, you can rent your house to yourself tax-free. It's part of the tax code. It's been in there for decades. It's one of the 70,000 pages that's amongst the tax code. It's super easy to implement, and it will save you thousands of dollars in taxes. The problem is that chances are you haven't already done that. Therefore, we cannot go back and add that. Yep. So the way I explain it is the December 31st is like a really tall wall. And you can throw some things over that wall, but not a lot of things. And the further you get away from the wall, the harder it is to throw something over. So in other words, if it's March of a new year, you can do an IRA and throw that money over the wall and save a little bit of money. But you can't do an IRA for 3 years ago now because it's too late. So most of the planning has to be forward-looking. We do sometimes find little things, but it has to be forward-looking. The biggest case that we run into quite frequently is people come to us after they've sold a business, have hundreds of thousands of dollars in potential taxes, and then want help. And we say, every single time, you got to call us before the business is sold. We can eliminate 100% of the taxes on the sale of a business if you get to us before you sell it. Can't do anything after.
But it's already been triggered when the sale happens, so too bad, so sad. You got to think just a little bit forward. So I think that's that goes to my question that I was alluding to, which is, what are some things or triggers that business owners would need to think, I need to, and you just touched on one right there. If you're thinking about selling your business, and I interviewed someone just last week on he helps businesses prepare to sell their business and sometimes even do it themselves. Well, there's a lot of things that go into preparing your business to look best for sale and all of that. But one of the things they should be doing is talking to someone like yourself to make sure all of the tax strategies are in place so that when that sale triggers, that there's as little liability as possible, maybe not zero, but as little as possible. So that's an excellent point.
Yeah, I mean it's forward-thinking planning that works in business in general, and it's no different for taxes. So people should not be planning their taxes in around April 15th. That is not the time to plan. It's too late. So That's why we keep using the word over and over again, proactive, because you have to be forward-looking. And we save, on average, for our average clients, $21,000 per year. So why wouldn't you want to solve for that? I mean, that's a lot of money for a lot of people.
And when you say average, what revenue, like for instance, you might have some entrepreneurs that say, wow, that's awesome. What revenue in the business would approximately you need to be at to think, well, I might be able to have some sort of a savings in that realm? Do you have to be a $10 million a year business to see that, or could you be a $400,000 a year revenue business to see something like that?
So we tell people to start looking for help on tax planning when they hit $100,000 in gross revenue, which is really low, not net, gross. If you're not paying at least $5,000 in taxes, then we can't help you. Obviously, if we're saving on average $20,000, people are paying more than $20,000.
Yep. And then can you clarify, too, what you meant about rent your house to yourself? So if you are the business, you're saying that the business would rent the house to the individual, or is that backwards?
No, that's actually correct. So it's the sometimes known as the Augusta Rule. It's only 14 days. You can't do it 15, because if you do it 15, then you lose the 14. So no more than 14 days. So let's use a simple example. Let's say that you have me over and I do this interview in your house. And as a result, you're now renting your house for the space to do interviews. So you decide that based on, and we help people with this, but you decide that that's worth $1,000 a day. So then you pay yourself from the business. The money comes out of the business at $1,000, and then it goes into your personal checking account, and you have to record on a tax form that happened, but you don't have to pay taxes as it's income. This is really great for people that are doing Airbnb. So if they're doing Airbnb and they're renting out a room for 14 of the days, it's tax-free.
Yeah. And
most people don't know that.
Does that then trigger, like in the old days, I remember hearing that, well, if you run your business out of your house, you want to do a deduction, you've got to get down to the square inch, and if you use it for personal, then you're in trouble, and then it kicks into, when you sell the house, then, so that's a whole different animal then.
That is a myth that has somehow been perpetuated by the accounting industry. There are 5 different ways in the Internal Revenue Code to write off a home office. So I always like to ask, if there's 5 ways of doing it, why is it a red flag?
Yeah.
I mean, if there was no ways of doing it and we tried to do it, that would be a red flag. But having a lot of different ways of doing it, in fact, it's not even square footage anymore. You can actually write off based on your rooms. So it's called business use percentage. So you can either do square footage of the room that you're using, or you can do the number of rooms. So we joke with people that in Texas, we don't use the square footage because our houses are big. So we'd rather use, a 3-bedroom, 2-bed house in Texas, maybe, 10,000 square feet. But in New York, it's only 1,000 square foot. So They want to use the square footage versus the rooms. And that was built into the code because of that very reason. So you can write off your swimming pool even. So there's all these little tiny things in the code. There's 70,000 pages. So there's bigger things. There's one strategy where we can stash $1 million a year tax-free. If you're making that kind of money and you're in the 60 to 70% tax bracket, so you're in the 50 federal. Most people don't know this, but there's 39.6 plus 3.8, and then there's about another 5% in phase-out rules. So you're ending up right around 50% on the tax code. You add in a state tax, you're close to 60%. So if you earn $1 million, you got to pay $600,000 in taxes, and you only keep $400,000. What if you can take that $1 million and stash it? Now all of a sudden you get to keep the whole $1 million. So, and it doesn't increase audit risk because these are legitimate tax strategies. The tax code was written basically it's a control mechanism. Congress wants you to use these strategies because they think it's good for society. So now there's 70,000 things in there.
Isn't your type of advice pretty timely anyway, of course, but everything you see these days on the business shows is talking about, the small business owner is getting crushed because of, and fill in the blank with a whole litany of things, right? Minimum wage and workers' comp and healthcare, all these things. Well, shouldn't that be a trigger that every time someone thinks that, kind of like Pavlov's dog, you hear the bell, the dog salivates. Well, when business owners hear those things, shouldn't they think, well, maybe I don't have as much trouble getting money into the financial bucket, but let me see if I can plug some of these holes.
Yeah, and it's a really, really big hole. So a lot of business owners, let's say I have a sub shop, and I'm trying to cut my costs on turkey. That's a small, I can find something for $1.20 a pound instead of $1.10 or $1.50 a pound. So I save a little bit of money on my turkey, but I'm not saving a ton. Meanwhile, they're paying tens of thousands of dollars a year in taxes, and nobody's targeting how do I solve that. It's because we've been taught, hey, there's two certainties in life, death and taxes. It's just not completely true. Taxes are a certainty, but you do not have to pay. The code is built so that you don't have to pay as much as you're probably paying.
So when someone does get away from, and I love your point about some of your biggest competition is apathy, because I teach marketing strategy for 3 universities, and one of the concepts is let's talk about our competitive advantage, our target audience. Well, sometimes when you think about your competitors, an indirect competitor, because a lot of people think, oh, my competitor is Joe down the street or Fred on the internet, but an indirect competitor could be apathy. It could be, like if you are a bowling alley, your indirect competitor could be the movie theater, and you're like, wait a minute, my competitor is another bowling alley. It's another thing that would take you away from doing what, it could be a putt-putt. So when someone gets away from the competition of either, one of your direct or indirect competitors, and they say, okay, let me decide to come with you, what are some of the most frequent questions that they ask right off the bat? Because I'm sure that people are going, but my guy should have told me, and we covered that earlier, but what are some of the more specific questions that they're gonna ask you?
The number one question we get is this going to increase my audit risk? And the answer is actually the exact opposite. It reduces audit risk. For example, a sole proprietor is 5 times more likely to be audited than an S-Corp. So just switching you from a sole proprietor to an S-Corp not only lowers your taxes because it could eliminate the self-employment tax, so you eliminate an entire tax, but it also lowers your risk by 500%. So it's once again, it's a myth that if you try to use the tax code, you're going to get audited. But the IRS is a collection agency. They collect the people with the most amount of income. If I lower your income by using the tax code, then you're less of a target.
Yeah,
Most people don't know that. It's another one of those things. It's just the accounting industry is, I don't know. I just think they're lazy. They are so busy trying to get the tax returns done that they don't have the time to do anything else. So they just focus on what we call compliance, putting the numbers in boxes. They don't have the time to do anything else. And if they do something else, then it creates work for them. Oh, great. Now I got to set up an IRA, which means I got to put that number in a different box. I just won't do anything so I can get this tax return done and out the door. So it's a frustrating thing. I couldn't believe that it was a hole in the marketplace, but it is, and it's a big hole, and we're driving a Mack truck through it. So,
and that's awesome, and I love when people can be like those trendsetters, and in reality, here's a term I think that you will appreciate that applies to you, disrupting an industry.
Yeah, we're disrupting several industries. There's actually 3 major industries that we're disrupting, and that's okay. that's
well, if people want to learn more about,
if we don't do our job well, someone's going to disrupt us.
Yep,
so that's our job.
So let's wrap up with how can people learn about how you disrupting an industry can help their business save money, plan their taxes in ways that are very ethical and fitting within the tax code, but you're letting things slipping through the cracks right now. So what is the best way that people can learn more?
So they can go to financialgravity.com, which is our main website. There's a free ebook offer on there. We also have a free video series at lowertaxhigherprofit.com. But if you go to the website, financialgravity.com, that'll lead you to the free ebooks and the free video series and all the stuff that's available to you.
Excellent. Well, most definitely, we really appreciate your time. Wonderful learning more about you and your business and how it impacts small businesses. And thank you so much for all that you do for the industry.
Thank you for having me.
Thanks for listening to Business Innovators Radio. To hear all episodes featuring leading industry influencers and trendsetters, visit us online at businessinnovatorsradio.com today.